All right, so Bitcoin sitting at 27 or 26,788. Looks like we've held a little bit this support level right here. This is the monthly chart. So let's look at it on the weekly, get that data. So the last all the way since March 23rd, you see this candlestick right here, Jake? We exploded through this 25,000 area, and 25,000, these whole numbers tend to act as a psychological point. So when people are selling something or shorting a crypto, they'll use these psychological whole numbers as stop losses. So what I like to do when I'm looking at like technical analysis is kind of not look at everything on the long side, but like looking at things on the short side. And what tends to happen when we break these psychological levels, like 25,000, 30,000, like the next level, the next psychological resistance is 30,000. And if we can get some volume over 30,000 and we can have like a few daily candles hold above that 30,000, this could lead to a short squeeze. Doesn't not necessarily a big one, but it will drive short sellers to cover their positions, forcing them to buy back their positions at higher prices, and we can take advantage of the up. So right now, you can see this one week candlestick. Do you remember that week, Don? This was in March, and we broke right through. And ever since we broke through on March, we've been trading range bound. We've been kind of like trading between 30,000 and 25,000. And what I like to see is us to like hold these levels. So what happens when a candle or price action breaks over a resistance like this? You have a resistance here, you have a resistance here. We actually tapped it four times. So you have a little bit right here, a little bit right here, and then right here, 2 weeks right there. We finally broke through it. This would be a great time to like long something. And then, as things are trading higher and higher, we have another level at 30,000. And like I said, like we sold off, we had about 2 months of just downwards pressure. But what happened is we bounced at that resistance, because when a resistance is broken, it becomes a support. And what validates that support even more is when we have another bounce at that support. So we have demand pick up right here, and then we have more demand pick up here in this zone. And that's what I like to see, because that shows that people are interested in Bitcoin at 25,000. So that's good news that we had, because I'm sure people have gotten nervous a little bit the last couple month and a half, 2 months. But what we're seeing is that support level be validated, and we're starting to trend back up. And it looks like, we have some good, decent price action for the last 2 weeks. We've been holding that level. And what I can just imagine is another test at 30,000. So if we go back up, we bounce, we might, hit that resistance again, sell off a little bit. But the fact that we've hit that 2 times right here is signaling that this is a pretty strong resistance. And the stronger the resistance becomes, the higher the move could be once we break through it. So I think once we break through, which we are, like, we're going to break through 30,000. It just like when, and that's where like patience comes in. That's where like having conviction comes in. So that's what I like to see. So again, Bitcoin's at 26,788. Moving on to Ethereum. We'll look at that on a weekly chart. So you already know, like, Bitcoin's the granddaddy. It holds the largest market dominance. So we're going to dive into like dominance and stuff like that. But you can see Ethereum's kind of the same deal. We have we're holding that support here at 1,500, and then we have another resistance here at 2,000. So we're trading between that range, 1,500 and 2,000, and we are still holding that level. So that's what I like to see. Ethereum's at 1,637. And then lastly is the total crypto market cap. So this is all the cryptocurrencies in existence. We're about $1.04 trillion. And again, same thing. It's pretty similar to the Bitcoin chart, since Bitcoin holds the highest dominance and has the greatest influence on the total crypto market cap. So that's what we like to see. Awesome. Now we're going to move on to coin market cap. So total crypto market cap we just talked about was 1.06, but you can see this is a massive accumulation phase. Like we're in this period between 2019 to 2020, where this is like one of the massive buying opportunities in crypto. So I'm glad you're all here and paying attention to the market sentiment. Volume's pretty low. You know, if you even look up the Google search history of crypto, Bitcoin, all-time low. And again, that's another indicator that this may be a bottom signal, or at least close to the bottom. If not, the bottom's already in, which I think the bottom's in, which is good news. Moving on, Bitcoin dominance. I don't know if you watched that video of the newsletter we just sent out talking about Bitcoin dominance and how it has an influence on the total market cap. Like, Bitcoin dominance is 48%. So we just talked about the total crypto market cap's 1.06 trillion. Well, we'll just say 1 trillion. Bitcoin's market cap's 480 million. So it holds 40 billion. Sorry. Thank you. Thank you, Don. And $480 billion of the market cap, and Ethereum coming in at 18%. So what is the signal? If you didn't watch the video, it really just signals that when Bitcoin dominance is high, that means people are most likely in Bitcoin because they need something that has stability, less volatile, wealth preservation, and that typically signals a bear market, which we are in. These are tools and resources we're giving you. We don't solely rely on it, but just know that, like, once you see Bitcoin dominance start to go to like 47%, 46%, that could be a signal that people are more interested in altcoins because people want to take on a little bit more risk. And we'll talk about altcoin season. We're not in altcoin season yet, but you're in the group chat, so we'll tell you that, you know, we're in altcoin season. This is a great time to be a little bit more aggressive. But right now, play it a little bit more conservative, protect your wealth. And then once we get into altcoin season, you don't have to sell your Bitcoin, but you can put new money in, buy the altcoins, trade them, swing trade them, and then increase your Bitcoin position. Where Don lives by this, trading altcoins. He's not against altcoins, but trading altcoins to increase your Satoshi position. And lastly, right here, we're going to be talking about the fear and greed index. We're at fearful. So 38.31, you can see we're at fearful.
That's not bad for a bear market, though.
What?
38 in the fear and greed index. That's pretty high for the bear market.
Yeah. Well, we're making our way out of the bear market, which is good news.
Yeah.
Awesome. All right. So we're gonna dive into some set of news, and then Don is gonna take this over. Let's see if I could here, let me what I can do is send you the link and then open up this link so I can stop sharing my screen so we can get a full view of Don's pretty face. And then pull up that link I just sent you about the coin Telegram, and then I'm going to pull up more links. So I'm handing this over to Don.
I would like some assistance on this because I think my last interaction with Binance was in 2017. I haven't used it since then. Troy, have you used it since then? Have you used Binance?
I do not use Binance, but Jake, just for some background, Binance is the largest cryptocurrency exchange. Coinbase is following behind it, but Binance is bigger. It's bigger in, Europe and other countries, not so much US, but it is the largest and has the most volume on that chain.
In 2015, 2016, all the way until they took it away from us in 2017, it was the place to go to get any altcoins. Like Cardano, in the early days of Litecoin, there used to be Potcoin. Like, there was all these different kind of coins that they had back in the day. Some of the coins are dead now, but you could get access to all of them on Binance, and Binance was available to us in New York State and into the U.S. In 2017. They took it away from the U.S. or they took it away from New York State, and they rebranded it to Binance.us. And you could use it in all the 49 other states except for New York, because New York had the BIT license, and the BIT license took away access to Binance for us. So you could still trade. If you had a VPN, you could still trade on Binance. But when I got word that we were going to lose access, I just took everything off, and I haven't used it since.
So a little background, real quickly, just to give them some context. So the previous bull market, I actually still have Bitcoin on Binance that I don't have access to. It's about $600-700 worth, which will be more in the future, but it's kind of frustrating. I can't. So that's why we live by taking coins off exchanges and having them in cold storage, because you won't have these issues, insolvency problems, hacks, and things just being taken from you.
Yeah, so they still remain the largest exchange in the entire world. They have the most crypto assets under management, I guess you could say, and they are getting heavily targeted by the SEC. CZ, the CEO of Binance, is in a battle with Gary Gensler, uh, going back and forth. CZ's doing a lot of tweeting. Gensler, not so much doing that much tweeting, but a lot of insiders that are working for the SEC are doing the unnamed uh, reporting, like anonymous sources and stuff like that, speaking on behalf of him and saying basically, what they're doing, what they're thinking. But the rumor, and I don't know. I don't know if this is a rumor or if this is real. I think if it was real, we would probably see the markets reacting negatively if it was true, and they haven't really done that. In the last like 24 to 48 hours, they were talking about the possibility of insolvency issues with Binance, and I don't think that that's true. I think that the SEC is kind of throwing these feelers out there to take the narrative and make it look like Binance is doing something nefarious. It's just the all-out assault, just to go to like the whole point of what the U.S. stance on crypto has been. It's been poor. Like we're way behind all these other countries, and the SEC can't figure out what direction they want to take in regulating it, and they can't figure out what direction they want to take and what securities are and what securities are not. They've already said Bitcoin's not a security. XRP won their case in regards to them being a security, but the language is a little bit murky. So it's like 90% not a security, and then 10% it might be. So it's like they can't really make up their mind on how they want to regulate this stuff. And they're going after an exchange that really isn't even operating so much in the United States anymore, because they've even started to take out access to Binance in some of the states, where you can't even get it even with a VPN in some of these states anymore. So it's kind of like puzzling why they're going after an exchange that, although it's the biggest one in the world, it doesn't really operate in the United States like a Coinbase operates in the United States, or a Gemini, or some of these other exchanges that you can access in the United States. So it's a little bit puzzling to see like what their end game is with going after Binance, because it's just not really heavily used in the United States. The biggest exchange in the United States right now is Coinbase. And Coinbase, they IPO'd. They have a stock that's on the stock exchange. It's publicly traded. They have their own little battles with the SEC as well, but you can still buy Bitcoin, you can still buy Ethereum, you can still buy a couple other crypto assets on there. So it's really weird. If you look at this article, they have a document that is unsealed, that John Reed Stark tweeted out a couple of hours ago, maybe actually might have been yesterday. SEC lashes out at Binance, threatened to seek a contempt order. The litigation war between the U.S. Securities and Exchange Commission and Binance continues to heat up exponentially. Specifically, hold on, I clicked on the actual tweet now so I can read more. Thanks to some limited judicial unsealing, albeit amid lots of redactions, it is no longer a secret that the SEC has accused the U.S. Binance-related entities of, one, withholding crucial information on who has control of its customer assets, and two, failing to comply with critical expedited discovery requirements. It's just like, it's really weird, like withholding the information on who has control of customer assets. When FTX went down way back in November, prior to that happening, it was like 2 or 3 days before, CZ did I forget.
Tom, who CZ is?
He's the CEO of Binance. He runs the exchange, Binance Exchange. Probably one of the, if not outside of Satoshi, the richest person in crypto, worth an untold sum of billions of dollars. They're not even sure how much he has. But like I said, I forget what it's proof of reserves or proof of assets. Yeah. He showed 2 or 3 days before FTX came down. He basically showed that he has 1-to-1 all the assets on his exchange, which is what he was trying to get FTX to do, and then they never did. And then 2 or 3 days later, they collapsed. So he's already proven, when he doesn't even have to prove it, that he's 1-to-1 all the assets that he has under management. So it's weird that, they're accusing him of not doing something that he publicly has already done. So I don't know if they're trying to say that he needs to do it again, which is also, like I said, it's weird because they don't really operate in, like, most of the assets they have under management. I would probably say like 95% of their assets are foreign assets. So like, are we really worried about like the small percentage of assets that are under management with Binance? Like, why are they focused on that exchange? I don't get it. I don't get it. I don't know, Troy, if you have your own ideas of what the SEC's end game is with going after Binance. I mean, it's just weird. It's super weird.
It could be. So my thoughts is a lot of it's smoke and mirrors, right? They could continue to come at these exchanges, but we've been like, for example, Brian Armstrong, the CEO of Coinbase, has been working, and he has been complying with everything. Like, he hasn't done anything shady. He's doing everything right. He's going to the regulators. He's not doing funny business. And I just think maybe when you see headlines like this, like, it could spark fear, especially that we're in, this period where the bull market's right around the corner. You're going to see a lot of smoke and mirrors in articles, and you're going to see a lot of headlines that they're going to try to make you question your conviction in cryptocurrency. Now, if you do independent research, you look at the history, you understand what you're invested into, you do thorough research, this doesn't even, I don't bat an eye. All I do is I just keep stacking. I put everything in cold storage, and I look at these headlines, and I look at multiple resources, and then I come up with my own, independent thought process. Because if you look at just one headline and it spooks you out, like, I have investors that reach out to me, and they'll be like, because I do private equity in crypto, and they'll be like, what is this? And I'm just like, I understand where you're coming from. It could spark fear, and you don't really have the conviction I do, but just take it all with a grain of salt. They can't stop Bitcoin. Bitcoin's the number one asset. They can't stop it. They can't stop it unless they shut off all the internet lines and everything, which would be detrimental for society. They wouldn't do that.
So if you really want to look at the hypocrisy of the SEC, you got Gemini operating in New York State, right? They were one of the early ones, along with Coinbase, that got the BIT license. And you have them with their Gemini Earn program, who basically, it's like something like $923 million of customer assets are locked up. I got 2.3 ETH of my own that's locked up in that Gemini Earn program that was loaning out their money to Genesis, who got caught up in the FTX blow up because they were leveraging assets over there. So you had Gemini taking their assets, putting it with Genesis putting it with GCB, and then GCB was collateralizing their debt with FTX blows up, and you see this domino effect, right? And you got this exchange that's allegedly, regulated in the state of New York, and like, not a peep from the SEC. Again, I like the exchange of Gemini, and I've talked about this before. Like, that experience was my own fault, and that I took my assets, put it somewhere I shouldn't have put, that I know better. And because I don't think of ETH the same way I think of Bitcoin, I just didn't think about it. But that's a whole nother conversation. But like, I like Gemini as an exchange, but like, if the SEC is going to go after Binance, why would you not be going after Gemini? I mean, you saw almost $1 billion of United States customer assets that they don't have access to, that have been locked up. And there's people that lost 2.3 ETH isn't really that much in the grand scheme of people losing like hundreds of thousands of dollars or millions of dollars. Like, there were stories of people's they took money out of their 401ks and IRAs and put it into Gemini Earn, because Gemini Earn at one point was giving I was getting on my ETH, I think I was getting 4 or 5% when I was getting less than 1% of my bank assets. You know what I mean? That was back before rates went up. They were given some of these, I think the Gemini Earn token was giving you 8% just on that, holding it 1-to-1 on their stable coin.
So this was a stable coin, GUSD, and you can earn 8% yield on it, right?
Yeah.
And this is a stable coin.
People were taking advantage of that. And they when that occurred with FTX, you saw they had this program set up that you didn't realize was tied to 3 or 4 other things, that when the one domino fell, all these other dominoes come down. And it's like, where's the SEC with that? And again, I use Gemini as my exchange of. I don't like Coinbase. I'll use Gemini to buy assets and I pull them right off. But like again, to be fair and to call it straight down the fairway, like you're going after Binance. Why is there no investigation into what the hell happened with Gemini and the Gemini Earn program? Like it's still I'm getting these bankruptcy notices of all this litigation and trying to reclaim my assets, and it's like this is an ongoing thing. And it's like you hear FTX, you hear DCG, you hear Three Arrows Capital, you hear Celsius, all that. It's like you don't hear a peep out of Gemini. You know why? Because it got this bit license in the state of New York that they created way back in 2016 that they suppose was their way of like regulating the industry in New York State and the financial capital of the world. And it's like Gemini's operating underneath that, and so is Coinbase. And here we are, this blow up happens with $1 billion of United States assets and not even an inquiry. Like that's complete hypocrisy. Like it's ongoing. They're in bankruptcy court right now.
Yeah.
Going back and forth. Barry Gilbert from DCG and the Winklevoss brothers, every other day they're tweeting back and forth at each other, blaming each other. And it's like, where's the FCC in here regulating this? But no, we're going after Binance that's got 95% of their assets are foreign.
And what do you mean by foreign?
Like European countries, Chinese countries. Like it's not United States customers that are affected overwhelmingly by that exchange. Right. So even if it is something nefarious going on with Binance, the overwhelming majority of customers are not United States customers. They've completely blocked. I mean, not completely, but they've done a pretty damn good job of blocking. Like you can't get, even with a VPN, you can't get on it. You can't get on Binance. I don't think you can. Like I said, I haven't tried since 2017, but New York State, you can't get access to Binance. You haven't had access since 2017.
And Jake, you understand, because I've had people say this and they're like, and there's actually that one guy, we made a video on it talking about crypto's bad after the FTX thing. Crypto is separate from exchanges. Like just because a crypto goes down doesn't mean the crypto is bad. It's the actors using the exchange for the buying and selling in Bitcoin. That's just like saying Apple stock is bad because TD Ameritrade went down. So that's why we stress people like not your keys, not your coins, to take the assets and move them to cold storage to protect yourself. We do it because we want you to protect yourself, but only use exchanges as an on and off ramp where you're quickly, as soon as those funds settle, they're immediately off your exchange. Or if you're doing an off ramp back to your bank account, just quickly do it. And they're building in the bear market where they can actually connect your MetaMask wallet, Rabby and stuff like that. There's things in the works where you can actually just don't even have to use an exchange. So there'll be one day where we don't even need an exchange.
Troy, I forgot to ask you if you had heard, because you were in Miami. Did you hear what happened in Vegas with MGM Properties?
No, but I know that's a big real estate company.
They got hacked. Literally crippled multiple casinos where slot machines weren't working, credit card readers weren't working, just basically crippled. I know it happened to Bellagio, happened at Aria, it happened at there was like 3 or 4 that were basically like shutting down because they couldn't operate. They couldn't get their stuff to operate. And then people that were there a day or two before came home from their vacations and were tweeting out that credit cards that they had used on property at either like shopping at a restaurant or some store or whatever, or even pay for their hotel room, had gotten charges from like China for like online casinos in China, or had got charged on like something on the other side of the world that people were like ringing up stuff for. So they had a massive like systems hack that hacked their slot machines, that hacked their credit card processors, that hacked their banks. Like really big story in Vegas.
Wow.
And it's just basically like showing the legacy system. Like you're putting your trust in these systems that are just easily hackable.
Mm-hmm.
And again, to talk about what you were just talking about and piggyback on it, the Bitcoin network since January 3rd, 2009 has not had 1 minute of downtime.
Yeah, that was a good point. Jake, do you have any questions, thoughts?
No, I really like that Vegas point right there. That was good. I haven't heard about that. I saw a couple articles on it, but I didn't know exactly what it was. So that's pretty crazy.
Yeah, it's crazy. I mean, you had to be looking for. I follow a couple. Like I go to Vegas every year with my friends, so I follow a couple of the MGM Twitter handles, and they were just like tweeting, basically like trying to tell people like calm down, like things are being worked out or whatever. And I was just like, what the hell is this all about? So then I started to search MGM, and I saw it was trending, and I was just clicking on all these tweets, and people were like, basically they had their cameras and they were like walking around the slot section, and the machines were like all out of service, like literally like it was like 5 o'clock in the afternoon on like a Thursday or some shit. And people were like walking around showing that like none of the slot machines worked. And they're like, we can't get in our hotel room because our hotel key's not working. Like we're locked out of our rooms. It was like a massive hack.
That's crazy.
Yeah. And I mean, and all that, and again, all that stuff is tied to the legacy system. And I know you probably saw today, Troy, about, cause you shared it when I posted it, about how Citigroup is going to digitize all of their customer deposits into tokens that can be sent instantaneously around the world. So it's like, basically that's the CBDC right there.
Yeah, that is absolutely insane.
And again, these are legacy systems that doesn't take much to hack into.
Yeah.
And you can't, and again, you can't do it because people have been trying for 14 years. You can't hack the Bitcoin network. Even if somebody is successful, the amount of money it would take to hack that block, by the time they hacked it, it would fork over into a new block and they would get nothing. They would get nothing out of it. Antonopoulos had a great thing that he did. We call it Twitter Spaces now, but 10 years ago, I don't know what they called it, but he did like this thing where he talked about like it would take basically $1 billion to like confiscate one block of the Bitcoin block. And by the time they were done with that block, it would have forked over and it would be like spend $1 billion to get like maybe $11 million of assets. And it's like, congratulations. Like you just wasted like $890 million to prove a point. And then Bitcoin just keeps moving along. You know what I mean?
Okay. Awesome. So I posted another link in the Zoom chat talking about the rate hikes. So if you want to pull that up, we'll just dive quickly into this.
Yeah, I got that up now. It looks like the meeting on the 20th, which is Wednesday, there is a 97% chance that rates stay the same and a 3% chance that they hike rates. And it looks like the markets have priced that in. So if for some reason,
by today's move.
Yeah. So if for some reason they actually do hike it that 0.25 percentage point, like they've done in the recent past, expect extreme volatility that day. Even though it's only 0.25%, the fact that it's at like 97% right now means that the market is like as close to positive as possible of what the Fed is going to do. So if the Fed doesn't do that, you expect extreme volatility that day.
And Jake, do you understand how interest rates affect the market? Like rate hikes?
So what type of interest rates are we referring to? Like just any like
the federal funds rate, which right now is at 5.25 to 5.5%, which means that's the amount that banks borrow each other's funds at. So when a bank borrows funds from another bank, they're borrowing at that rate, which means that when they're selling you loans, they have to make money on top of that. So if you'll look like right now, I think the average loan on a house is like on perfect credit is like in the 7 to 8% range, because if they're borrowing at 5.25 to 5.5, then they're going to give the people with the best credit that, 7.5%. So they make 2% on you. And then the subprime, as your credit goes lower, they make more and more money on top of that with you. So as those rates go up, the cost to borrow goes exponentially higher. But also on the flip side of that, because we're running at a deficit with our $33 trillion now, that I believe it was yesterday or today we just passed, it's getting close to, or we may have passed it now, where just the interest on the money that we owe is going to be about $1 trillion per year, because the government has to also pay interest on the money that they borrowed that they still owe. So that goes up. And then also people that are carrying revolving debt, like if you have a credit card, your credit card bill that minimum payment will start to go up and up and up because the amount that they can charge you goes up and up and up. So that credit card that you might have got at 12.99% or whatever it was, that great rate that they gave you, now those rates are going to go up higher and higher because the lending rates have gone up. So they have to make their money.
And can you explain how it correlates with assets like crypto?
Well, the easiest way to correlate that would be to say that all of the banks, as of right now, and have been, but it's like blatantly obvious now, all of the banks in the United States of America, 100% of them are insolvent because these banks, when you put your deposits in the bank, they take those bank deposits and they put them in treasury notes. Okay. So because of how fast and how violent these rate hikes have been, most of these banks, because people put money in the bank all the time, they've been putting money in the bank this year, last year, the year before, in 2020, when people got the swath of money and were putting it all in the bank, when the banks get your deposits, they put them into treasury notes. So in COVID, when interest rates were at zero, basically almost less than zero at some point, where they were getting maybe like 0.5%, they were taking all those assets and they were putting in those 2-year and 10-year notes at 0.5%. So when the bank is taking your deposits that you have in the bank and are only earning 0.5% on it, but then interest rates jump up to 5.5%, if people come in and take their money out, they're losing 5% on every amount of money that they're giving to people when they come and get their money out of the bank. Does that make sense?
Yeah, definitely.
Yeah.
So-
and Jake's a finance major, correct?
It was kind of finance and marketing, but I mean, I understand a little bit of the mortgage side. I'm a real estate agent, so the mortgage interest rates I understand. Trying to figure out how they correlate to cryptocurrency, I'm learning, right? So it's a little different.
Well, the way that it correlates is that you have an asset, the US dollar, that they're printing to infinity. So they print that asset to infinity, which causes rampant inflation. Rampant inflation causes the Federal Reserve to react. When the Federal Reserve reacts, they have to hike interest rates because that's really their only tool to do that. So when they hike rates, they're trying to get the inflation to come down. But while they're doing that, it affects all the other parts of the market. So all of these assets are affected. And then one of the best assets that we have outside of gold and cryptocurrency is real estate. So then you have these people stuck because when you want to liquidate, like let's say that I have all of my values in real estate. Let's say I'm a real estate mogul and I need access to cash. So I want to liquidate my real estate. Well, how many sellers how many buyers are going to be out there that want to pay these rates to buy my property unless they have that straight up cash, right? When I'm a seller, I have to have a buyer, and not every buyer is going to have cash. Even the people that are worth a lot of money are still borrowing money in order to get access to that property. So if they have the perfect credit, they're going to get the 7 or 8%. And if they have less than perfect credit, they might be close to 10%. So then you're stuck like being liquid with these traditionally really good assets. At least for the last 15 or so years, real estate's been great because interest rates were so low. You could sell property like that because people are getting, I bought my house in December of 21 and I got a 2.98 interest rate when I bought my house. Like buying real estate and getting it at 2.9% for 3 years or 30 years is unbelievable. Like you're doing that en masse, right? But at a point now when it's like, well, I'm going to hold on to this and I'm going to get this note for 30 years at 8% or 9%. Like who really wants to do that? So you start looking for alternate ways to store your wealth, right? And that's where Bitcoin comes along. You look at, I'm going to take my wealth, I'm going to put it in the bank, but I know that these banks are not solvent and I know that they're printing my money basically to infinity so that, that $100,000 I put in the bank 4 or 5 years ago only buys $75,000 worth of goods and services now. So that's evaporating. So where do I put my money where I can both have it grow in value and have access to be able to liquidate it, right? So doing that in real estate, yes, it will grow in value, but we need to liquidate it. It's not as easy to liquidate as it was maybe 2, 3, 4 years ago.
And that's why something that's illiquid like that's why people, put their money in Bitcoin, which is a highly liquid asset. You can get in and out of it.
Or traditionally, that's what gold was. That's what gold would have been through times like this. And, you look no further than a gold chart from the pandemic till today. And if Bitcoin didn't exist, gold would probably be about $10,000 an ounce right now. If Bitcoin didn't exist, gold would be a 5-figure asset right now. If that's all we had for a hedge, gold would be that figure. But because Bitcoin exists, it's taking that market share, and people are realizing that it has the true properties of money, even better so than gold with that portability factor, that people have flooded to this new alternative asset to store value. And that's why gold has appreciated, but nowhere near the levels that it would have if Bitcoin didn't exist.
That was a really good point. I like that. And I didn't really think of that before, because gold isn't really moving much. Like it's not doing the numbers Bitcoin are doing.
There's enough baby boomers that still believe in it that allowed it to still appreciate and to still hold value.
Yeah. But people like us, younger people, are putting their money in Bitcoin.
I'm curious to see what gold looks like in 25 or 30 years.
Yeah, me too.
You know what I mean? Because it's not really like millennials are not really like, when I have conversations with millennials that are into Bitcoin. And again, I don't own much gold right now, but my foray into crypto was through gold and silver. That's how I found it, because I just didn't believe in the system. All the ideology that I have about the traditional system are the same. It's just the way that I choose to store my wealth has changed. And when I have conversations with younger counterparts that are into crypto and Bitcoin as well, and I'm like, hey, gold isn't, it's not a shitty asset. It's still, and they're like, oh, fuck gold. Gold's shitty. Like, I'm like, all right, man. Like, and I'm trying to think of like how this is going to look in like 25 or 30 years for people that are holding on to gold, and like what the price of gold is going to do. Not that I'm overly concerned with it. It's just like a curiosity aspect of what that will look like, and how people will view that. That asset was as good as gold for 5,000 plus years. But now that we have Bitcoin and these other crypto assets, it's like, why would I want to hold on to something that's, it's fungible, and it's like, the portability aspect is just so difficult, especially as, it's crazy because like, I remember a time when like holding a brick of $10,000 was like a big deal. Like that was a lot of money that had buying power. And it's like today, like it really ain't that much money, dude. 10,000 ain't really that much. Right. And it's like the value of money. It's like, how much money is it going to, are things going to cost 20 years from now? And in my lifetime, being 45 years old, seeing like goods and services prices just exploding how they have, it's crazy to think of like what price tags are going to be on some of these things. If we don't get the money, if we don't fix the money, we're in trouble. Like we are in trouble. If Bitcoin fails as an experiment, dude, we are in trouble. We are in trouble. Serious trouble.
Do you have any questions?
No, I'm good. Soaking it all in, man.
Yeah, we're playing it a little bit different today. We're diving more into like macro interest rates, some Bitcoin properties. And how do you feel, man? Like, how do you feel about the market? Are you looking at your portfolio? Are you?
I mean, when I was in stocks, I was kind of like, I was glued to my phone.
Yeah.
With this, it's so volatile that I've grown to not pay attention to it now.
Yeah.
Because one day like I'm down 500, the next day I'm even. Like right now, my portfolio is not up, and I also don't have a ton invested. But I mean, when I started, there was a good couple months where I was up 1,000. Now I think I'm down a couple thousand, so like 20% of my portfolio, right? So, I know it's going to go up. I said to be patient.
Yeah, man, it's investing is really about, time in the market, not timing the market. It's just the longer you hold on to good, sound assets, the better you'll see your portfolio perform. I mean, I'll give you my experience. Like I watched the price of Bitcoin go from 3,000 to 69,000 to 15,000, and I didn't sell a thing. I have more Bitcoin today than I had at the peak of 69,000. So in the way my brain works now is I have more today than I had when it was at 69,000. Like I have more value than I had at the peak because I've been adding since then.
In dollar cost averaging.
It's almost 2 years since the all-time high, right?
Yeah. We've been in this.
Yeah.
This is one of the longest. I think, is this the longest bear market?
No,
Believe
it's charting. It's charting on average, bro. It just seems like it because
it's clockwork.
you seem like it seems like it to you because like this is like your true like you're here for it. Like
Yeah.
you're paying attention. Whereas like I've been in two other ones paying attention and it's just like that's and again that's what allowed me and all you guys that like saw that bull run and were there for those ridiculous prices and then stuck it through this bear market. It'll make it so much easier when you watch that the volatility occur to be able to just sit back and just take it whichever way it goes. That's why I was able to watch it go. I mean, it went from not only did I see it go from 3,000 to 69, I saw it go from 3,000 to 60 back to 30 and I didn't sell.
And then
And then back up to 69 and back to 15 and I didn't sell. Because I don't why would I if I own the Empire State Building, why would I ever sell that? Right? If I own the greatest building in the city of New York, why am I worried about what the price is doing? I have no intention of selling. So what do I give a shit for? Oh, I just lost 20% of value of the Empire State Building that I own. Who fucking cares? I own the best building in Manhattan, and you want it, and you can't have it. That's the way I look at Bitcoin. It's like, oh, it was 70,000 and now it's 15. Cool. Pretty soon everybody's going to want to have it, and I got it, and you don't. Now what? That's just how my brain operates. How I can just.
That was good. Yeah. Bitcoin is the best asset, man. You just the thing is, it's just like a learning curve thing. It's a knowledge thing, you know.
Robert Breedlove explains it really good. He's got a "What Is Money" podcast. He says in order to fully understand Bitcoin, you first, and again, his name of his podcast is "What Is Money." You have to first understand what money actually is, and then how the actual system works. Once you, number one, understand what money is, and then number two, fully understand how the traditional system works, and then you see Bitcoin, you're just like, it's a no-brainer at that. Once you do those two things first, and then you get to Bitcoin, it's a no-brainer. The conviction just like does itself. There's like 0% chance that this isn't it to me. I mean, that's not logical. There's always a chance that it fails because nothing in life except for death and taxes are 100%. But to me, with my conviction, it's just like it's either this or the end of civilization. And if the civilization ends, who gives a shit at that point, right? Who cares what you got? It's over.
Yeah. And that's where people make the mistake is, and I know you can explain this really well, is they think of Bitcoin as like a stock. They think of Bitcoin like an Apple or an Amazon. It's money. It's hard.
It's in their language too. They'll say shares. It's not even money. It's not even that it's money. It is a asset that is a store of value. It's an energy store of value. It is the way that we conduct energy transactions. Does that make sense?
Mm-hmm.
Like it's like it's not just it represents like the when you look at a buying power chart of Bitcoin and you see like where it started to where it's at, obviously you got, these things going, but the chart like Michael Saylor says in that interview, it's only going up, Laura. Like Bitcoin's price, whatever it's going to be priced to, now it's the US dollar, whatever we're going to price that to is going to continuously go up because there's no way that they can stop printing money. Unless they go on some standard, which at this point, they have no intentions of doing that. Like the United States government is not going to back their currency with anything. They've had multiple opportunities. They're 33 trillion in debt. It's far too late for any of that. They're going to keep this party going. They're going to continue to print money. And it's like they owe money. And the only way they can pay it is by printing more money to pay that to owe more money. It's just never going to stop. It's like that movie in the 90s. I don't know if it's probably too old for you guys, called More Money, More Money, More Money. That was the name of the movie. And that's what they're doing. Just print more money, more money, more money, more money. That's all they're going to do. They're just going to keep printing. They have to. They're forced to. They back themselves into a position where the only thing they can do is to continue to print money. And even now, when they're lying to us, saying that they're not printing anymore, you got people on Twitter who are showing like the overnight Fed lending out money to banks. Like they're still printing. They can't stop. It's impossible for them not to print. So again, it's either Bitcoin or society collapses because they have to keep printing. And Bitcoin is that asset that is the only bearer asset that we have that can't be confiscated, that can't be corrupted. It's trustless, it's permissionless, it's as close to perfect money as we can possibly have. You can transact in it and know that it's decentralized. No one controls it. It's our only lifeboat off. And like Noah's Ark, like I've said this to you before, Troy, like Noah's Ark, not everybody can get on. And that's because we're not letting everybody on. It's because not everybody's open-minded enough to jump on that boat. And when that flood comes, bro, they'll be trying. They'll be trying, but they'll get swept away, unfortunately. And that's why, we created these, Define Labs and Define Productions and all these avenues to give people the information to be like, yo, we're on that pulpit in the church. This is the gospel. Either you can listen to it and rock with us, or you could say it doesn't exist. And then, when the Messiah comes down, you're asked out. To put the religion piece into there for those of you that like that sort of thing.
So what happens if we default? If we default on the currency? I mean,
if we default on our debt,
yeah,
we won't. We'll keep printing. We'll print more to stop that from happening. It's a charade. Like their debt ceiling bullshit that they do every couple of years. Like they're never going to default. They literally just push a fucking button and they print more money. Listen, the only election I ever voted in was 2008. I haven't voted since, when I finally realized it's a fucking sham and it's a joke. And I remember because I paid attention, because I'm like, who should I vote for? And I was like paying attention to stuff and policies. In 2008, which is 15 years ago, the national debt was like 3 trillion. And they were complaining about how high it was back then. It's 10 times higher in 15 fucking years. 10 times higher. From 2008, financial crisis time, to today, 10 times higher. And they can't stop. They can't stop printing, which is insane, because think about where the price of goods and services are going to be. There's going to be a time, bro, when it's like, oh, I make $100 an hour. And you're like, what? That's all you make, bro? How do you get by?
I'm pay $50 or $500.
My first job, I'm 45 years old. My first job, that's what I made an hour. $4 an hour. That was my first job. $4 an hour. And my dad, when I made that, was like, holy shit, they're paying you $4. My first job was 65 cents an hour. My dad's 68 years old. 68 cents an hour. And now these little shitheads are making 25 and they're complaining about it. 18 years old. This is what happens. Gold standard, 1971. We got off of it. My dad graduated high school in 1972. Year after we got off the gold standard. That was my dad's graduating high school year, 1972. It's been all downhill since.
Surprise.
So we won't default because they'll just keep printing, which is congratulations, but then it fucks the middle class. All the rest of us get screwed because prices of goods and services keep going and wages will not catch up. Because, again, capitalism is a great thing unless you're on the lower end of that. Right? If I own a company and I own a business, capitalism is awesome because I'm maximizing profits for my shareholders. But in order to do that, I can't pay my employees 10% more every single year. I can't give them a 10% raise. I didn't get a 10% raise at my job. They sent me a letter like, congratulations, we're going to give you a 3% raise. Like, we're really doing something. Well, all over the news, it says inflation's at 10%. It's like, oh, cool. I just lost 7% buying power. I got a 7% basically, takeaway from my pay. That's what happened.
Yeah.
It can't stop. It hasn't stopped since 1971. And I said this already. Like, it started in the 60s. And they caught, all these other countries caught on. And that's why Nixon made his announcement in 71. But we were off. 68, 69, we were off. How do you think we did the NASA trying to land on the moon? You think that shit was free? Bro, we were printing to infinity in 69. Nobody knew until 1960 or 1970, early 71. And then Richard Nixon was like, oh, yeah, we're going to get off the gold standard now.
Wow. Does that help you, Jake? Does that make it more clear of like why like we're so like
Yeah,
yeah.
that was great. No, thank you for clarifying on that. I'm glad I asked.
And I always like when people are like, when people say like Bitcoin ain't for me, and they're like, it's not my thing. It's like, all right. So what's your plan? And if they're like, oh, real estate, it's like, yeah, real estate's great, except you are pegging that. Number one, it's illiquid. It's very tough, especially if you're holding a lot of, like, if you own a $50,000 house, it'll be easier to get rid of that than it is a $500 million property or 500,000, even a $500,000 property or $1 million property. Like liquidating that in a high interest rate market is not that easy. It's not as easy as people would think it is. And also, like, you have to remember, it's like you're not making the money that you think you're making. Like if I bought my house 10 years ago for 100,000 and I sell it today for 200,000 and I say, oh, I just made $100,000 on this house. It's like you made $100,000 in the bearer instrument that you're using to gauge the value. But the buying power of $100,000 in 2013 is a whole hell of a lot different than the buying power of $100,000 today. I would take that 100,000 in 2013 than I would today. Yeah. That's why any like question that somebody gives you, it's like money in hand today or money in the future, you always take the money today because the money will always be worth more today than it will be in the future. Cash in hand.
So let's say someone owes you $5,000 and they're like, well, I'll pay you the $5,000 in 3 years. You want that today because in the course of the 3 years, that $5,000 ain't going to be the same.
They actually win in that scenario. Unless they're paying you interest, unless you're getting interest on it, they're winning in that scenario because the buying power that they have holding on to that money is more than the buying power that you'll get when the 5,000 is back in your hand. Like if somebody, let's use a $10,000 example, right? If somebody borrowed $10,000 from you on March of 2020, they borrowed 10 grand and then they paid you back today, the 10,000 that they owed you. And they had that 10,000 for 3 years. The 10,000 that you had in 2020 of March has about $6,500 of buying power today. They put they basically put $6,500 back in your hand.
That's
the way you have to think about things. You can't think of, oh, I got my 10,000 back. It's like you got the number back that we keep track with, but the buying power is what you lost. So again, getting back to Bitcoin and looking at like all these crypto assets, it's like we look at our phones and we look at the chart and it's like, I'm guilty of it sometimes too. Like what's the price and all that stuff. We start to show out with that stuff, but it's like big picture, like what's my buying power? Like, what does my buying power look like? When I got into Bitcoin, the price was in the hundreds of dollars. So when I first got in, like, even though it was 10 years ago, like my buying power is exponentially higher than it was when I first got in. When I had my first coin way back in the couple $100 stage, like the fact that it's 26, almost 27,000 today, like look at the buying power that I gained by having that asset for that time, for 10 years.